He hired his first employee in April. By September, the IRS had sent him a failure to deposit penalty of $3,200 because he hadn't been remitting payroll taxes. He didn't know he was supposed to deposit federal income tax withholding, Social Security taxes, and Medicare taxes on a semi-weekly or monthly schedule. He thought he'd settle everything at year-end with the annual return. That's not how payroll works. Payroll taxes don't wait for April. They're due days after each paycheck, and the penalty for late deposits starts at 2% and can reach 15% of the unpaid amount. Before you issue a first paycheck, you need several things in place. An EIN, Employer Identification Number, if you don't already have one. State employer registration. Most states require you to register as an employer within 30 days of your first hire. An unemployment insurance account with your state's workforce or labor department. You'll pay State Unemployment Tax Authority, known as SUTA, premiums into this account. Workers' compensation insurance required in nearly every state for W-2 employees. And a completed Form I-9, Employment Eligibility Verification, for every new hire, retained in your records for 3 years after the hire date or 1 year after separation. Your employee must complete Form W-4 before their first paycheck. The W-4 tells you how much federal income tax to withhold based on their filing status, allowances, and additional withholding elections. As of the 2020 redesign, the W-4 no longer uses allowances, it uses dollar amounts and checkboxes. The IRS, Publication 15T Percentage Method Tables, translates the W-4 information into a withholding amount for each pay period. Most payroll software handles this calculation automatically. Many employers also need the state equivalent of the W-4. Check your state's withholding registration requirements. Payroll taxes consist of 3 components for each employee: federal income tax withholding based on the W-4 and the IRS withholding tables. Social Security tax, 6.2% withheld from the employee, plus 6.2% paid by you as the employer. Medicare tax, 1.45% withheld from the employee plus 1.45% from you. Additionally, for employees earning more than $200,000 in the year, you withhold an additional 0.9% additional Medicare tax, but only from the employee side, not matched by you. You also pay federal unemployment tax, FUTA, at 6% on the first $7,000 of each employee's annual wages, reduced to 0.6% with full state unemployment credit. Payroll tax deposit schedules depend on your total payroll tax liability. New employers are generally monthly depositors. Taxes withheld and employer contributions must be deposited by the 15th of the following month. If your total payroll tax liability exceeds $50,000 in the IRS's look-back period, you become a semi-weekly depositor, meaning taxes from payroll on Wednesday through Friday are due by the following Wednesday, and taxes from payroll on Saturday through Tuesday are due by the following Friday. The deposit schedule is not based on your preference. It is determined by your prior year payroll tax liability and enforced by automatic penalty. Form 941, Employer's Quarterly Federal Tax Return, is filed 4 times per year: April 30, July 31, October 31, and January 31. It reports total wages paid, federal income tax withheld, Social Security and Medicare taxes, and any adjustments. This is separate from your deposit schedule. You must both deposit on time throughout the quarter and file Form 941 by the quarterly deadline. Form 940, The federal unemployment tax annual return is filed by January 31. Your state will have equivalent quarterly and annual payroll tax filings, typically with their own portals and deadlines that don't align with the federal schedule. Use payroll software from the first paycheck, not after you get it wrong. Gusto, ADPRU, and QuickBooks Payroll and OnPay all handle federal and state tax calculations, deposit scheduling, Form 941 filing, W-2 generation, and new hire reporting. Basic single employee plans start at $40 to $80 per month. The software pays for itself in avoided penalties and saved time within the first quarter. A payroll error that triggers a $3,200 penalty, like the example in the opener, would have taken 4 years of monthly software fees to equal. Set it up before the first paycheck, not after. New hire reporting is a federal and state requirement triggered within 20 days of a new hire's first day of work. You must report the employee's name, address, social security number, and your EIN to your state's new hire reporting agency, typically the state's Child Support Enforcement Unit, which uses the data to locate parents with support obligations. This is not optional and carries per hire penalties of $25 to $500 depending on the state for non-compliance. Most payroll software automates new hire reporting. If you're managing payroll manually, the report is submitted through your state's employer self-service portal. Independent contractors versus employees, the classification decision matters before you hire. A worker classified as an independent contractor receives a $1,099 NEC and is responsible for their own self-employment taxes. A worker classified as an employee receives a W-2 and you're responsible for payroll taxes, workers' comp, and unemployment insurance. Misclassifying a worker as a contractor when the IRS would classify them as an employee results in back payroll taxes, the employer's share of FICA, penalties under IRC Section 3509, and potential state-level penalties. Use the IRS's common law control test and Form SS-8 when classification is ambiguous. Hiring your first employee is not a milestone you celebrate by figuring out the compliance on the fly. The filing requirements, deposit schedules, and registration steps exist from the first paycheck and carry automatic penalties when missed. Set up payroll software before you hire. Register with your state as an employer. Complete the I-9, get the W-4, understand your deposit schedule. For the broader picture of tax structures that work best at different stages of business growth, and when the S-Corp election becomes relevant to a growing employer, the Paying Yourself as an Owner video covers the compensation and entity decisions that compound your position.